Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, just in at the top of this hour, Philippine unemployment inched higher to 3.9%. Creating new jobs remains one of the top considerations for Filipino voters on May 12th. The Bangko Sentral says more manageable inflation and downside risks to growth allow for a more accommodative monetary policy stance. And sustaining the momentum, Bank of the Philippine Islands books a 9% first quarter gain. We speak with BPI President and CEO TG Limcauco. Were unemployed in March compared to the previous month, according to the Philippine Statistics Authority. The unemployment rate inched higher to 3.9% in March from 3.8% in February. This means about 1.93 million Filipinos were jobless in March. This was lower than the number of unemployed persons in March 2024 at 2 million. Meanwhile, underemployment in March also rose to 13.4% from 10.1% in February, translating to 6.44 million individuals. The country's employment rate for February stood at 96.1%, with the services industry still the top employing sector, accounting for over 60%. Before the results came out, RCBC's Mike Ricafort shared that Philippine employment data are at the best levels in nearly 20 years. Going forward, he says, local unemployment rate may move in line with other ASEAN or Asian countries in what he calls a new normal for the Philippines. The Bangko Sentral says more manageable inflation outlook and downside risks to growth allow a shift to a more accommodative monetary policy. This comes after the April inflation fell within the forecast range of 1.3 to 2.1%. The figure supports BSP's outlook of manageable inflation over the policy horizon following a downward revision in baseline forecasts, mainly because of easing commodity prices. BSP notes easing commodity prices have helped maintain a manageable inflation outlook until 2027. It also sees balanced risks ahead with possible price hikes in transport and utilities, but lower rice tariffs and weak global demand may ease pressure. President Bongbong Marcos says the country's removal from the Financial Action Task Force gray list is expected to boost business growth, support overseas Filipino workers, and attract more foreign investments. President Marcos says it would mean a simpler, more affordable financial transaction system. He adds this will lower remittance costs of OFWs and make it easier for businesses to secure international financing, drawing more foreign investors. Meantime, the Bangko Sentral Governor and Anti-Money Laundering Council Chair Eli Remolona says collective reforms across agencies have strengthened the financial system and reinforced the country's commitment to fighting financial crimes. Remolona says the delisting will improve cross-border transactions by reducing costs, ease compliance, and improve financial transparency. It may also encourage more banks to start or resume operations in the Philippines. The Philippines was placed on the gray list in 2021. It was removed in February after fulfilling requirements to address gaps in the country's anti-money laundering and proliferation financing frameworks. Bank of the Philippine Islands started the year with a 9% year-on-year increase in net income to 16.6 billion pesos for the first quarter this year. The Ayala-led lender, driven by the sustained loan growth, solid margins, and disciplined cost management. On the technical chart, BPI appears to be on track to retest its previous high of 148 per share, says Ron Acoba of Trading Edge. The stock recently broke out of a midterm consolidation, suggesting strong momentum, increasing the likelihood that BPI will reach or potentially surpass its prior peak. With us now for more is BPI President and CEO TG Limcauco. Good to see you, TG. Welcome to the program.
Nice morning, Cathy. Thank you for having me.
Right. So first up, your assessment of the Philippine economy and how it's influencing the trajectory of the bank's outlook for growth.
Well, things look very good for the Philippine economy, Cathy. You said that they reported inflation yesterday at 1.4%. So that really provides the central bank to ease monetary policy, which will make consumers a little bit more confident and give corporates the reasons to borrow and to continue to invest. Although there is some uncertainty about the global economy with trade slowing down given the uncertainty about the tariffs, but I think that will wash through. And consumer confidence remains very high in the Philippines. So looking good for our Philippine economy. We should grow maybe 5.5% this year, given that we have elections also, and that should be good for the banks.
Let's flesh that out. The economic growth that we're seeing here, April's inflation slower than forecast. First quarter GDP is out tomorrow, Thursday, just in time for the Fed decision. And the Bangko Sentral did say a more accommodative monetary stance. So what will a measured approach by the Bangko Sentral mean for BPI in terms of net interest margins?
Well, we believe that the Bangko Sentral has room to lower rates, which means there's a likelihood that they will be cutting policy rates this June. If not this June, then certainly by the next meeting, given the very controlled inflation and the very strong Philippine peso versus the dollar. For BPI, that means deposit rates, time deposit rates should come down in the immediate term, which will help us preserve our net interest margins. But over the long term, loan rate asset yields will come up, which will shrink our net interest margins over the long run. But all in all, it looks good for credit quality. It looks good for net interest margin. And for the banks, you just need a very disciplined approach to preserving your margins and raising funds.
That's true. And in terms of the external policy uncertainties that you just mentioned, taking that into account, the risks, what do you face in terms of asset quality or the non-performing loans that you're keeping in mind at this stage because of those global uncertainties?
Well, certainly because of the global uncertainty, what you have is a lot of our major corporates pausing and being very deliberate about their investment strategy, their investments into CapEx. What we need to see is some clarity as to whether the global trade resumes at this pace or whether the slower pace of trade is the new normal, and people will adjust. So I think what we have today is just people pausing. I think that within the next 6 months, we'll have some clarity and investment should continue. From a credit quality point of view, I think everything's very manageable here in the Philippines. The banks are seeing some, I guess, pressure on the consumer side, not because the consumers are hurting, but because I think most banks are beginning to go a little down market and expanding their base, which of course you'll see expansion of your NPLs as you broaden your base.
Right. The Trump 90-day pause is going to end in July, but we're so far feeling the impact of the 10% tariffs that are in place now. So what's been the impact on your trade business?
Well, we're seeing, I would imagine, very little impact yet from the Philippines' point of view, given that the U.S. is, well, it is our largest trade partner. It is still a very small portion of our economy. What you have also is the fact that most of our trade, if you call it that, most of the foreign exchange that goes through is for services, which isn't impacted by the tariffs. That said, what we are seeing is that a lot more trade within the ASEAN region with the Philippines and with China, as I believe Chinese and the other exporters are exporting to the Philippines as an alternative market relative to the U.S. And so that's why we're seeing inflation come off here. Some goods are already dropping in price as the Chinese factories, Chinese producers are sending their goods to the Philippines.
Let's talk about the consumer here. The loan growth target. What's your target for the year and the role that the consumer and the business banking / SMA play, both considered high yield segments for the bank?
Overall, Cathy, the bank, we're looking for 11-12% loan growth as a whole, but that will really be driven by our consumer book. We're looking at our consumer book growing at about 20% year on year, and we are looking to expand our consumer book closer to 30% of our total book. Today, we stand at about 28.8%. 3 years ago, that was barely 24%. So we're making progress as a bank to shift our book towards the consumer sector and be more inclusive as a financial institution.
Got about a minute. How's the BPI mobile app coming along? You have Vibe since October 2022 and the insights that you're getting from the new AI-powered app.
Well, we do have two major apps for our consumer. We have our BPI mobile app, which is for traditional banking. That's got about 7 million people on it. Vibe by BPI is our payment and rewards app. It's really meant for people who want to manage the rewards that they earn on BPI. That's where they can see the points they earn and redeem those points. But it's also our, what I would call our starter app for people who are unbanked by BPI. It's got payments, it's got free transfers from Vibe to any other institution. You can transfer for free on that. And you can make any payments just like any other app, any banking or fintech app out there. So it's our starter app for the unbanked.
All right. Well, thank you so much for joining us, TG. I appreciate the insights there. TG Lim Kauko, the President and CEO of BPI. Well, you're watching Money Talks. Coming right up, U.S. President Donald Trump meets with newly elected Canadian Prime Minister Mark Carney. And Stephen Yu of Mercer Marsh talks about high medical cost claims in Asia. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. President Donald Trump has long signaled that the tariffs would be used as a bargaining chip for better deals with trading partners. But on Tuesday, he sent a different message. We don't have to sign deals. Trump made the remarks during his meeting with Canadian Prime Minister Mark Carney, fresh from his electoral victory after running on an anti-Trump platform. Since Liberation Day on April 2nd, the White House said over 70 countries were already calling to strike deals, and one trade advisor predicted 90 deals in 90 days. So far, not one has materialized yet.
We also have a situation, because everyone says, when are you going to sign deals? We don't have to sign deals. We could sign 25 deals right now, Howard, if we wanted. We don't have to sign deals. They have to sign deals with us. They want a piece of our market. We don't want a piece of their market. We don't care about their market.
Canada was one of the first countries hit by the tariffs. Asked whether Trump is willing to lower the rate, Carney said no decision has been made yet, since that would involve complex negotiations.
Apart from the fact that he said that he would, is willing to have that negotiation, I think that's the main thing. That doesn't presuppose the outcome of the negotiation. As I've emphasized, it's a complex negotiation. There'll be zigs and zags, difficult aspects to it, but the prospect is there. We discussed it in more detail.
Meanwhile, Treasury Secretary Scott Bessent and Trade Representative Jameson Greer announced that they will meet with China's top economic officials this week in Switzerland. This marks an initial step in potential negotiations over Trump's tariff assault with one of the world's superpowers. The U.S. did not name who will attend for China, but Vice Premier He Lifeng is Beijing's chief trade negotiator. The tariffs hastened a free trade pact between Britain and India, with leaders of both countries praising the historic deal. The pact is expected to increase bilateral trade by over £25 billion, or over $34 billion by 2040. This is UK's most significant trade deal so far since leaving the European Union in 2020. Investors remain jittery on the impact of tariffs, even if the leaders of U.S. and Canada met yesterday, Tuesday, pushing markets down. The Dow declined by nearly 1%, S&P 500 slid by over 0.75%, and the Nasdaq's down by 0.8%. Benchmark 10-year Treasury yields fell to 4.3%. Gold prices inched higher at $3,411 per troy ounce. U.S. futures point to a gain when the markets open later tonight, Manila time. The Dow rising by 0.7%, S&P 500 up by nearly 1%, and the Nasdaq climbs by over 1%. And U.S.-China talks lift Asian markets at the get-go this Wednesday. Take a look at the up arrows there. Australia's ASX 200 up by 0.1%. South Korea is returning from a two-day holiday and is up 0.3%. And Japan is also returning from a two-day holiday, up 0.25%. Let's take a quick check on the Philippine market, see how we're going. PSEI opens this Wednesday higher by about 0.6%, 6,458. Stock market gained yesterday, Tuesday, by nearly 1%. Check out the Philippine peso. Looks like it opened stronger, 55.42 the dollar. Peso closed yesterday stronger at 55.61 against the greenback. Asia's medical claim costs remain persistently high at 13%, outpacing inflation by 5 times despite signs of a slowdown globally. The Philippines, Indonesia, Malaysia, and Vietnam have reported the highest medical trend rates of 21%, 19%, 15% and 15% respectively, says Mercer Marsh, and the costs are likely to remain high. With us now for more from Shanghai is Stephen Yu, the Benefits Asia leader at Mercer Marsh. Good to see you, Stephen. Welcome to the program.
Thank you.
So I'm counting 8 out of the 10 markets in Asia is going to see medical claims costs exceeding double digits this year. What's driving that?
Well, Cathy, Mercer Marsh Benefits Health Trends 2025 report highlights that while the medical conditions driving claims in Asia have remained largely consistent over the last decade, their financial impact is increasing. Insurers in nearly all markets project medical claim costs to increase by more than 10% this year, with Asia looking at 13%, the Philippines at 21% for 2025, as you just said. Insurers surveyed in our report actually highlighted several key factors contributing to the rising medical claim costs. 81% said that the increased insurance utilization driven by a higher incidence of health conditions, and 73% pointed to an ongoing medical inflation and a shift towards more expensive or advanced treatments. One of the key contributors is the cancer claims, as it continues to significantly impact health and claim costs. Cathy?
It is. So how do we deal with that? I've seen in your report, and it's quite an expansive deck here, that cancer is really the #1 issue. So what would you recommend then so that insurers won't have to cut costs while expanding coverage?
Well, Cathy, the insurers are playing a bit of the catch-up here, and the projected rise in medical claim costs in the Philippines is driven by several factors, including medical inflation, changes in treatment mix, and increased utilization patterns. Specifically, our report actually indicates that medical trend rates are influenced by rising costs associated with advanced treatments and overall increase in healthcare service prices. In Philippines, the healthcare system faces different pressures, as do all the different markets. So in the Philippines, for example, the high COVID-related claims are still affecting margins, while there is an increased volume of utilization and a shift towards a higher cost treatments and medications. Additionally, there are medical staff shortages as many healthcare professionals leave for better paying opportunities abroad. So actually, this situation is compounded by a significant increase in medical fees and salaries, which have risen by approximately 25% as set by professional healthcare organizations. And these factors collectively create distinct challenges to the healthcare system in the Philippines, Cathy.
Multifactorial when you come to think of it. But then I was just reporting that in April, inflation's fallen to a near 5-year low. So what impact might that have in easing up the medical inflation that we're seeing here in the Philippines?
You're right, Kathy. The actual inflation rate for Philippines was 6% in 2023, and then 3.2% in 2024, and projected as 3% for 2025. However, the medical trend rate 2023 is 24%, which is 4 times higher than inflation, 7 times higher in 2024, and projected to be similar in 2025. So our data indicates that medical trend rates in the Philippines are significantly higher than the general inflation rates, suggesting that medical costs are rising at a much faster pace than overall cost of living. And this trend highlights ongoing challenges in managing healthcare expenses in the region. As a reference point, Kathy, while Asia's medical cost is projected to be lower than the Philippines at 13%, it is still outpacing inflation by 5 times. So it is not unique, as we're seeing claims going higher than inflation, Kathy.
Right, but there's got to be a silver lining here, Stephen. Minding that gap between what workers want and what insurers offer. Really important. So how do we narrow that gap?
First, I would suggest let's look at the preventive cancer screening. I mentioned one of those things before. Our report emphasizes the importance of it as a means of early detection, which can significantly reduce the risk of higher claims related to later diagnosis. Half of the employee indicated that these screenings are a helpful benefit. Yet in Philippines, as with the rest of Asia, trails behind other markets in other regions in managing cancer as an intensifying risk, with 26% of the insurers in Asia offering preventive screening in their health plan coverage compared to 43% globally. So with those notable disparities between insurers and the workforce in Asia concerning the inclusion of preventive care and screening health benefits, it is essential for employers to develop a meaningful benefit strategy to meet the unique needs of workforce. This often requires ongoing dialogue with advisors and insurers to ensure that offerings remain relevant. Kathy.
And also on the employees, the onus is on us to just keep ourselves well and get tested. Well, thank you so much, Stephen Yu of Mercer Marsh Benefits. Appreciate the insights. Comelec Task Force Baklas is set to file disqualification cases against at least 30 candidates for allegedly violating the guidelines on campaign materials. The poll body had previously warned materials are considered illegal if they fail to meet size regulations, not made from biodegradable materials or posted on electric posts or trees. Meanwhile, 3 more candidates have been asked to explain themselves over possible violations of the anti-discrimination and fair campaign guidelines. These are Pingping Francisco, who is running for mayor in Barbaza Antique, Caloocan congressional candidate Egay Erice, and Mario Salvador, mayor of San Jose City, Nueva Ecija. Coming up after the break, you'll have to pay more to enjoy Netflix beginning next month. Keep it here on Money Talks and One News. Welcome back to Money Talks. I'm Cathy Yang. This just in from China. The People's Bank of China will cut interest rates to support its economy amid a trade war with the U.S. Central Bank Governor Pan Gongshang says the PB CEO will ease interest rates by 10 basis points and lower reserve requirement ratio by 50 basis points. The move comes as the Chinese vice premier will hold talks with U.S. trade officials later this week. Maynilad has completed a 218 million pesos pipe replacement project across 5 barangays in Quezon City. The initiative replaced 3 kilometers of aging, leaky pipelines across a 3-kilometer stretch in Greater Fairview, Holy Spirit, Maharlika, Pag-ibig, Sanayon, and San Jose. The upgrade cut daily water losses by over 3 million liters and improved pressure enough to reach upper floors without booster pumps. Maynilad President Ramoncito Fernandez credited local government support for helping speed up the project and reduce traffic disruptions. So far, the company has replaced 70% of aging pipes in the West Zone as part of its ongoing watery recovery efforts. Netflix will increase its subscription rates in the Philippines starting June following the 12% value-added tax on digital services by foreign companies. In an advisory email to subscribers, Netflix said it will apply VAT to memberships and the monthly price will be updated to the following starting June 1st. Its mobile and basic plan is now at 169 and 279 pesos respectively. Meanwhile, its standard and premium plan is now at 449 and 619 pesos per month. The price hike also affects add-on member slots, which will now cost 169 pesos each. The advisory comes after President Marcos signed into law Republic Act 12023, which imposes a 12% VAT on digital services, including media, music, video, video on demand, and advertising. Pope Francis' successor begins today, Wednesday. The 133 cardinal electors will gather for a Holy Mass for the election of a Roman pontiff at St. Peter's Basilica, 10 a.m. Vatican time or 4 p.m. Manila time. The Mass will be presided over by Cardinal Giovanni Battista Re, Dean of the College of Cardinals. The conclave itself inside Sistine Chapel will begin at 4:30 p.m. Vatican time or 10:30 p.m. Manila time. Only one round of voting will take place Wednesday. If no cardinal gets a 2/3 majority on the first ballot, 4 rounds of voting will take place in the following days. Voting occurs at 4:30 p.m., 6 p.m., 11:30 p.m., and 1 a.m., all in Manila time. Officials and staff assisting the conclave already took the oath of secrecy. Violation of this oath would lead to excommunication. In the past century is any guide, the conclave should take no more than 1 week. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.